Let's go. It's time for Top That Trade. Phil Flynn of Fox Business Network News contributor is in the house, and Knuckman, the chief market strategist at bullseyeoption.com, is in his lake house. Here we go. Round number one. C not. Monday's big sell-off wasn't exactly the C word, a crash, but it certainly freaked some people out. What's better from here, to run with the bulls and buy, or growl with the bears and sell?
One day does not change my opinion. We're in a bull market. We have been mostly in a bull market for the last 50 years with a couple of minor exceptions. And I don't think this is that time. You've got to remember the S&P is up 680% from its 2009 low. So this is not 2008. This is not the financial crisis. This was a profit-taking pullback. People had built up profits. And I'm going to say it again. It was a very crowded market, and these have to happen. A flush out move, an FO move, is required to make another move higher.
Yeah, I think we saw one of the biggest jump ups in the fear index that we've ever seen. It's among the record highs. And that usually means that people are making bad decisions. And when people start to panic, they sell good stocks for the wrong reason. One of the things that you have to look at during this recent crash is that retail buyers did 80% of the selling, where the big guys were doing 80% of the buying.
Very telling, Phil. That's a great lesson there. Round number two, carry trade tragedy. Without getting into the weeds, Japan's market turned so ugly on Monday and did crash. Is it a time to be a buyer of Japan stocks now?
I think it would be, because what Japan has been doing is taking steps to lift the supports it's been giving to their economy for the last couple of years. They've been supporting the economy to try to encourage buying. They've done it forever. They've tried to fight off deflation. They couldn't do it, and they finally threw in the towel. And what you saw here is really a divergence, because where you have Japan, they're raising rates. Everybody else in the world is cutting interest rates. It creates this movement of money, and sometimes it happens very quickly. But that move is probably 75% already done, and I think the damage has been done. So it's been cleared out, and that means that there's really good opportunity, I believe, in the Japanese stock market, as well as the U.S. stock market as well.
Just like we saw in a lot of our markets as well, not nearly to the same magnitude, but we saw shakeouts in markets that were crowded, like the gold market, short term, the currency markets, the interest rate markets, and the stock market, all in the short term.
Some opportunities there. Round number three, Monday's movers. Billions moved on Monday, and it means that billionaires lost big money. So what billion-dollar stock would you buy?
It depends on your personality. Are you content with a 5%? It turns out that now Warren Buffett has more money in short-term treasuries getting 5% than the Fed does. Or do you want to use this as an opportunity? Would you be more upset if you didn't buy something like an NVIDIA down here and it rebounds? Or would you be more upset if you lost money if you bought here and it went down?
Yeah, I mean, we talk about Warren Buffett, Berkshire Hathaway. He's been selling these stocks for a while. He sold Apple, for example, one of Alan's favorites. And one of the things that you have to keep in mind here is that these are stocks that are now on sale. Right? These are the stocks that you couldn't afford. Now you get an opportunity to buy them. So you can bet with the Warren Buffetts. You can bet, with the Amazons, because you probably are getting this at a huge discount right now compared to what it was. Now, that doesn't mean it couldn't go down more. And Alan's right. If you're nervous, you're getting pretty good interest rates, and they're probably going to go lower in the future. So if you want safety, go to bonds. But if you want growth, go with the billionaires.
And the good news is, if you buy the NASDAQ or you buy the Qs, that's most of the Magnificent Seven make up a lot of that. So, if that all rebounds, like it very likely could, you're gonna be very thankful that you use that. You don't have individual stock risk.
Here's your bonus round question for today. True or false? Dolce & Gabbana is selling perfume for your dog.
Ooh, gotta be true. People spend ridiculous amount of money on their animals, so I'm gonna say true.
Well, no one wants the perfume that smells like a dog, so I guess it has to be true.
It is true. You did it. You're right. Business First AM will be right back.
Thank you. I don't want a stinky dog.
Go to businessfirstam.com for where to see our show on TV.